Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So recently we started looking at this indices, okay, and what we've done so far is we've done two videos. There are 30 companies in the Dow Jones Industrial Average. Each one of these companies, and obviously some of them are Sharia compliant, some of them are not. We looked at so far 10 companies, and today we're going to look at 3. Unfortunately, there's only about 13 that are Sharia compliant. There's a couple of that have a question mark next to them, so I left those out. I will show you the full list at the end of the video. But as you can see, the Dow Jones is actually down for the year. So a year to date is just flat almost. It's not actually down or up, whereas the S&P 500 is up about 7%. So the reason I started this video is just to look at the companies that are in there, because a lot of them are very solid business. They have been around for a long time. Okay, they have excellent free cash flow, and they have a loads of different criteria that they need to meet in order to be part of the Dow Jones Industrial Average. So what I'm going to do now is I'm going to share with you those 3 videos, and then I will show you the full list. But before we do that, I would ask you, if you haven't joined us obviously already on the Discord, please help just the channel by joining either the Patreon account and then join us on the Discord. You get actually a few spreadsheets and things like that you can use for your stocks and ETFs and so on, and you can meet inshallah like-minded people on the Discord that talk about stocks all day long. So inshallah basically what we're trying to do is build a community of basically Sharia like-minded people that are looking for Sharia compliant stocks and so on, and share good practice inshallah. And that's the most important thing. I'm not a financial advisor. I don't know what I'm doing. I'm still making things up. I'm still making mistakes obviously, but what I'm doing here is basically sharing my journey. And if that means we can build a community of like-minded people that are willing to share their journeys and tell us what they're doing, what we're doing wrong, what is good, what is bad, inshallah, then we can help each other. Okay, and that's my goal. Like I've always said to you guys, I'm not a basically scholar. I am not a financial advisor. I'm just some random guy who's actually trying to help the community, because I did realize there was not that many people on on the internet that are helping other brothers and sisters in basically buying Sharia compliant stocks and so on. And people will tell you all sorts of things, but they will never show you what they're buying and selling. Whereas with me, this is what you get. Is basically what you see is what you get. Like every single week, I tell you exactly what I own, what I'm buying, what I'm selling, mistakes that I've made, okay, mistakes that I'm making currently, and so on. Anyway, let's get to the video, inshallah, and then I will, as always, obviously, I will show you the full list, the Sharia compliance side of these companies at the end of the video. So the first company is actually interesting because they reported their earnings today, and they're actually down just about 1%, I think, right now. And the reason is because they missed the revenue. Okay, so they have missed revenue, and they guided lower in terms of the next term. They say basically next quarter, basically they're saying, you know what, we don't think we'll do, or by the end of the year, we're not going to do as well as we thought, because there are obviously challenges ahead, and those challenges are not something new completely. And if you think about this, right, one of the things, if I can find it, so one of the things the company talked about is the fact that they no longer, basically imagine, right, you're in a recession, you basically getting paid maybe less, or everything cost is more. Okay, you're not gonna all of a sudden have an extension in your house and basically pay for another £30,000 extension in the back garden or whatever, right? You're not gonna buy a new grill for your barbecue, whatever. And this is basically how this company makes money, right? So for that reason, we kind of expected this to happen. But this has basically, for the, I think it's almost like they said 20 years, there we go, revenue miss in about 20 years. So the worst the revenue miss in about 20 years. But when you look at the numbers, it's not actually that bad. Okay, so they were expecting the earnings about $3.82, it came about $3.80, and in terms of the revenue, 37.26, 38 basically 0.22 is what was expected. So about $1 billion difference. So yeah, for that reason, and obviously guiding lower, for basically the stock is down a little bit. So let's have a look at the financials in. Okay, and again, if you need more details of the company, you can actually have just to basically do a little bit more research about the company. So the company currently has a market cap of $292 billion. It has a wide economic moat, and it has basic current price is $283 per share. It has a dividend yield of almost 3%. Latest increase was 10%. The 5-year growth rate above 16%, and payout ratio 47%, which is actually not bad at all. Dividend yield of basically dividend streaks of 14 years. So they have increased to 14 years in a row. Annual payout is $8.36 for every share of this company that you own, and safety is 87%, which is really good. Profit margins about 11%. Return on equity, I think, is a negative right now. It's not negative, but it's a negative equity, so that's why it's not included. Free cash flow here, we're looking at about $11.5 billion, and they have returned 15.61% in the last 10 years. Next year, the earnings are expected to grow about 6%, then 3% after that. Now, this is going to change because this was based on obviously the research that I've done a couple of days ago. So in the next 24 hours, we will see this slightly changing. People might actually say, you know what? It's no longer this 267. They might say it's slightly lower, whatever it is, we will see. So this might slightly change, but right now as we speak, it's about 6% next year, 3% after that. And Morningstar is saying it's about 8% premium. $267 per share is where they think the price should be. And looking at it right now in terms of their revenue, so I think this still hasn't been updated, but you can see there is basically expected a little bit of decline in 2024, and then basically bounce back after that in terms of revenue. In terms of earnings as well, again, the same thing, and then it bounces back after that as well. And just to show you what the analysts are expecting, so in terms of ratings, as you can see here on this side, okay, basically the Seeking Alpha analyst is saying it's a buy. Wall Street is saying it's a buy. Quant Basic, which is the system they use, is basically saying hold. Not far from a buy, to be honest. 3.25. I think it's 3.5. I think. That is basically a buy. So there you have it. That's the first company that we wanted to look at today. The next one is another giant company. That's the Procter & Gamble. I'm sure you know this company that makes the head and shoulders and all types of products. Okay, $368 billion market cap. So it's a huge company. It has a wide economic moat, $156 per share. Dividend yield of 2.4%. Latest increase was 3%. 5-year growth rate of 5%, payout ratio 64%. It's slightly higher than actually expected. I haven't checked the company in ages, so 64 seems a little bit too high. Normally 61 and above, 50% actually, well, my cut off 61 and above is actually a little bit over, but it's okay for this company. They have a plenty of free cash flow, and they have products that are very much in demand. Dividend growth is basically a streak of 66 years of increasing that dividend, not just paying it. They have increased this dividend for 66 years in a row. And annual payout we're looking at right now $3.76. Okay, safety 99%, profit margin 17%, return on equity 31%, and free cash flow $12 billion. Total return last 10 years we're looking at about almost 9%. Next year they're expecting about 9%, then 5% after that every single year. 21% premium right now. $129 per share is where the price should be. I have been waiting for this company to come down for a very long time. It hasn't. Don't know what to do with it. I think I'm going to hold on to my 20 shares or so that I have. I would love to start buying this company if it comes down at least to 230-ish, but I don't think that's going to happen anytime soon. Now let's look at Seeking Alpha in terms of their revenue. So as you can see, it's heading in the right direction. So from 80.1, let's call it 80.2 to 80.2, 81.43 billion dollars, and then 85 from there. So it is definitely heading the right directions. And then looking also the EPS is also heading the right direction. Now let's have a look at in terms of ratings what basically they're saying here. So Seeking Alpha analysts are saying basically it's a hold right now. Wall Street is, as always, is saying it's a buy, and then Quant is actually saying it's a hold. Okay, so they think the valuation is too expensive, growth is not there, profitability is actually A+, momentum is actually B+, and obviously revision is actually B. Now, so again, this is another great company, but it seems right now a little bit too expensive. Okay, company that we're looking at today is Cisco. Cisco is 193 billion market cap. It has a wide economic moat, $47 per share right now. Dividend yield of 3.31%, which is really good for this company. Latest increase 2.6, so they don't increase it as much as the other companies, but in terms of the five-year growth rate is actually not bad, 6%. Payout ratio 44%, so it's quite low. They have room to improve that if they needed to. 11 years of increasing that dividend payout is right now $1.56. Safety at 91%, which is really good. The highest you can get is actually 99, which is basically what Procter & Gamble got. Profit margin 21%. To return on equity, we're looking about almost at 28%. $15 billion of free cash flow. Total return in the last 10 years about 11%. Next year they're expecting 7.5 in terms of growth and earnings growth, and then 7.3 basically the years after, 5 years after. Right now discounted about 16%. 56 is where the price is. I think they're reporting this week. Let me just double check. I think they are reporting this week or next week. So let's have a look. They are reporting on, no, they are reporting on the 17th. They're actually reporting tomorrow. So let's see what happens. So they are reporting tomorrow. So it'll be interesting to see what happens. But let's have a look at the estimates. Okay, 16%, 70%. So this is the EPS. And then in terms of year on year, in terms of revenue side of things, okay, we're looking at from $56 billion to $60 billion. 60. So it is definitely heading in the right direction in terms of that. And you can visualize it here. Okay, if you visual person like I am, that you can see it growing, and then in terms of EPS is also growing and heading in the right direction. Now in terms of ratings for this company, you can see here Seeking Alpha is saying is a buy, Wall Street is a buy, Quant is actually saying is 3.48%. Now valuation is good, and growth is actually, valuation is all right, growth is actually saying not there, profitability and the rest of them are actually fine. So there you have it. There's another company that I think is great, like I have in my portfolio, and I've been buying more and I will be buying more. Now I'm going to show you the full list. You can pause the video to have a look at. So 3M we've talked about, American Express, Amgen, Apple. So there's loads of different companies that I left out. So companies, for example, American Express, because we can't invest in that Sharia compliance side of things. Apple are completely left out, although right now it's still compliant apparently. But obviously the situation with the credit card, the interest rate of like 4% on your money, whatever it is, are left out. Bone is not Sharia compliant. Caterpillar, what is this? Dow Jones, for example, Goldman Sachs, the bank again, Honeywell, and Intel. Intel used to be, but now it's not anymore because of the this, like I think debt levels and so on. IBM, what a great company, has been around for donkey years and still is. McDonald's, JP Morgan. So there's loads of different companies that I couldn't include in here. This is one of the companies I would love to invest in, United Health Group. Really great company, but obviously Sharia compliant. I think their interest-bearing debt is quite high. Verizon, I wouldn't even touch it. Again, Walgreens, Boots Alliance, Walmart, Walt Disney. So there's loads of different other companies in this, and a lot of them, these companies have something in common. They have free cash flow, they have been around for a long time, very mature companies. Okay, so the Dow Jones is actually a good place to start with if you're looking for consistency, if you're looking for companies like Nike, for example, Microsoft, and Mac. They have some really quality businesses in there. Obviously you can have, if you're quite young, you look at some of these companies and you can look at the QQQ, which is basically the Nasdaq, and then maybe pick the best ones in the Nasdaq and just kind of mix that together. But obviously you're gonna have to do your own research when it comes to that, right? So like I've always said to you guys, it really helps for you guys to help us, to join the Discord. If you can, you get access to all of these things. If you don't like it after that, you can leave it, but obviously try at least to get access to these files. Is all yours. If I make an update, I'll always share it with you guys. I basically don't mind, to be honest. But it really helps to obviously to carry on in this channel and so on. So there you have it. That's the companies that I wanted to talk about today. And what I'm going to do is I haven't added this week's money yet. In the next couple of days, I will share a couple of more videos and let you know what I'm buying, what I'm selling. This is actually, I think Procter & Gamble paid me today this much, so basically for this quarter. So I'm definitely going to invest that back into one of these companies, inshallah. Let you know how it goes. Have a wonderful day. Assalamu Alaikum.